Right now, we are firmly in the aftermath of a whole lot of market carnage, not only in cryptocurrency, but of course across really global markets, across all the major stock markets internationally. There's a lot of different reasons for that. It's kind of beyond the purview of this video, but check out yesterday's news video for a more thorough explanation as to why this is happening, our take on it, how it affects the world of cryptocurrency. I'm not telling you anything new. You're already aware of this information. Needless to say, it has been very, very bloody. And to bring this all back into cryptocurrency, it actually serves as a decent reminder that the majority of projects out there are going to fail in this space. Probably have a much higher failure rate than a lot of other spaces, a lot of other markets. 95% of altcoins, for example, never even make it through their first bear market. So we're going to discuss why that failure rate exists, why that metric is a thing in the first place. And we're also going to talk about 3 altcoins that are much less likely to fail, ones that have been around, they're kind of perennial favorites, and that so far have stood the test of time, that you may want to consider when the chips are down and when their prices actually are pretty discounted. Welcome to the channel. My name is Maddie, and this is Altcoin Buzz. All the best of luck if you choose to invest. I know it's pretty crazy out there right now. Like I said, this is a moving situation with a lot of moving and dynamic parts. We're still trying to make sense of it. So if you're in doubt, I wouldn't chase anything either on the way up or the way down. It's probably a good time to just hunker down, maybe let the dust settle. But look, whatever you choose to do, I wish you well if you choose to invest, and I mean that genuinely. But just remember that I am not a financial or investment advisor, so even if I would recommend that you take it easy right now and relax a bit, you ought to remember that this video is not official financial or investment advice. So, I was probably being generous a moment ago when I cited that 95% of altcoins fail, because depending on how you're tracking that statistic, we actually have upwards of 99% of alts that do fail. At least according to Gecko Terminal, there are 3.1 million different tokens out there. 3.1 million. I remember the days when I thought 5 or 6 or 10,000 was way too many. And so if you choose to include all of these millions of meme coins in your calculations, then the fact is that not only will the vast majority of them fail, of course, but we'll never hear about the vast majority of them. The real number of actual cryptocurrencies is probably closer to 25,000, again, depending on how you define it. And even out of these 25K, most will fail for one of the 2 following reasons. Number 1 is low float coupled with high FDV. I know you've probably seen a lot of this recently if you consume a lot of crypto Twitter, but the idea is low float and circulating supply creating an artificial barrier that increases price. These increases come from the slightest bit of trading or even price manipulation from whales or market makers. The FDV stands for fully diluted value, and if that is high, while simultaneously only a very small percentage of the supply is in circulation, that's a problem. And it's actually so common across all kinds of places, including us here at Altcoin Buzz, how we report on token unlocks monthly. Many of these fall into that low float, high FDV category, so they are actually easy to spot, at least, and avoid if you so choose. And as far as projects go, and where possible, you want to look for the opposite, high float and low FDV. Then when a price doubles from, let's say, $2 to $4, the entire market cap also doubles. The second major problem that we have is the instance of no product market fit. You have a situation where only hype is driving the price. And we've all seen the hype train for altcoins. Usually it goes something like this. They announce the launch. Then there is the launch. They try to get hype. If you get some hype rise to an all-time high in price, that's usually the course of events. Then there's a hard crash in the following bear market cycle that tends to occur, and they often fail to recover the old all-time high. This is the 99% trap, because 99% of altcoins either fail entirely or at least fail to recapture that first all-time high that they achieved years ago. But honestly, the easiest way to avoid this is to not chase that hype when you do see it. Instead, and this is somewhat counterintuitive, it can be difficult in a sense, but really the key is to buy during down periods in the market. Kind of like we're in now, to be honest, and of course looking for product market fit. And of course, you can tell if something has product market fit because it has customers. That means you can look at revenues or protocol fees earned and really see how the project and the token is trending. If it only has hype, then it's going to be obvious by its lack of users and paying customers. And yes, these are features that ought to be considered too, but again, those users and paying customers are kind of a priority in terms of assessing a project. So if you can avoid these two problems, these two pitfalls, the first being low float, high FDV, and the second being no product market fit and only hype, then honestly, you're probably 90% of the way there in terms of making money in altcoins. With that being said, now let's look at 3 examples of altcoins that are likely to buck the trend and which have the least potential to fail during the long run. Today's Altcoin Buzz Spotlight video is sponsored by Sui. And you may not have noticed lately, but Sui is fast becoming a home for some of the best airdrops out there. Deepbook, which is Sui's premier gateway for liquidity, has already had 1 airdrop and a second one is on the way. Other Sui ecosystem projects are airdropping soon as well. And the easiest way to get them to secure these airdrops is by buying Sui, SUI, and holding it in the Sui Wallet. There is a new mobile version available. You can check that out by clicking the link in the description below. First off, we're looking at the Graph, ticker GRT. Of course, we've been following this project for a long time. It's been in our master portfolio now for more than a year, and it allows for the querying and organizing of blockchain data both for users and for developers. The Graph makes building apps easier and enables tools like block explorers to search for transaction data. For example, here's the link to the subgraph for Lido Finance, which is the leading ETH restaking platform. Here you can run a query just as more than 270,000 others have done to get the data that you need from Lido. Maybe you want to know how many have staked there for 2 years or longer because you think these coins may never move. Or maybe you want to use the Graph's API keys to ask Lido about what average stake size is. The point is that with the Graph, you can do all these things because the Graph makes this data available that otherwise would not be unless the protocol itself organized it for you. And of course, because they're not going to waste their time doing that, this is a valuable resource. Now, for most of the entries on this list, we'll have to ignore the 24-hour price because, as you can see, we're down 16.8%. GRT, that is down 16.8% over the course of the last day. And that's just nasty. But look, here are the positives. GRT token has 90% of its supply in circulation, and that means price growth equals real project growth. The Graph sits right now at a market cap of $1.1 billion. As you can see, that is about 90%, or exactly 90% of the FDV, which is 1.242. Again, the fully diluted valuation, $1.242 billion. Now, it's probably a little harder to believe that DeFi is making a comeback on days like today, but that is in fact the case. And as that continues to unfold, and as tokenization of real-world assets continues to grow, oracles are going to become much more important, even more so than they already are, because they are the link between blockchains and data from the outside world, kind of like a stock or crypto price or sports scores or whatever, real estate values, any kind of data, even weather. All of this kind of stuff has to be fed into blockchains that cannot themselves otherwise communicate with the outside world. And of course, the leading oracle by far is Chainlink. Link's data feeds are really key for proper pricing when tokenizing an asset. And they also can be pre-programmed into new smart contracts or added to existing ones very easily. You can even automate your smart contract so that it works seamlessly and in a decentralized, trustless way. And these are the kind of things that are important to us early adopters in the crypto space. Chainlink is the great combination of being in a hot category, RWA, real-world assets, and being the leader in that particular category. Hot narratives always perform better in crypto, and leading projects in those narratives tend to do the best. Like I said, ignore the price of Link here on the day, down 21.1%. Nasty. But as a project, Chainlink has a lot of other use cases like prediction markets, where we're actually seeing big action betting on the US presidential election, for example, on Polymarket. And markets like these are going to continue to grow. As they do, of course, they're going to need accurate off-chain data. And Chainlink will not have low float issues to deal with as many other projects do because more than 60% of the total supply is in circulation. And it's actually been that way for a long time since many of the tokens not in circulation are used for paying the data feed providers. So the price of Link right now sits at $9.02. The market cap is just below $5 billion, $4.942 billion. Again, that is 60% of the FDV of $8.128 billion. Finally, last but not least here, we're looking at Golem, which is in one of our favorite areas of AI, decentralized computing power. And as we've seen from the likes of Akash and Render and others as well, there is a big demand for computing power for all AI and machine learning projects. It's just a very hungry sector. It's got a huge appetite for processing power. And it's so expensive that a lot of new projects prefer to rent out that computing power in the early years at least. And that's because it's a move that keeps costs low while the projects are able to find their footing and develop their customer base. Golem has an updated, very robust roadmap for the coming months, which includes ModelServe, a service that helps new large language models run inference, which they need for customer-facing applications. Also, API access for Golem's AI workers to perform or automate various small tasks. A full GPU provider, so a project can do whatever it needs with it. And a whole lot more, actually. So if Golem plays its cards right, it's a project that could become one of the few projects that could really become the decentralized cloud computing powerhouse in crypto, the Amazon Web Services, or AWS of crypto, if you will. Golem, ticker GLL, is unlikely to fall into that 99% trap that I mentioned, since it is both in a hot narrative with AI and all of its total supply is currently in circulation. That's 100% of GLM tokens are in circulation. That means, as you can see, at a price of 24.8 cents, unfortunately down 14.2 cents, but the tokenomics here are really something to be admired and to be commended too. The market cap of 228 million is identical to the fully diluted valuation of $228 million.
And so if this market pulls back hard under this level and then consolidates and comes back, we're likely to sell and stall.